You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 15th day of November, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. It's been quite a week. It's been quite a couple of weeks. But it's Friday, and everybody's been working for the weekend, so here it is. Thanks for joining us today. We do 2 live broadcasts every trading day. The first one, that's our live training room. That's reserved for members only and those taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael comes on a little bit later, he'll show you step by step how to take the trial. There's no credit card required. And if you sign up for the trial today, you'll get to use the indicators over the weekend. Some markets never sleep. And then your trial will officially begin Monday morning. Or if you follow the instructions in the email you get, you can join us Sunday night when the alerts start going out. And then your free trial will run all the way through next Friday at 5 p.m. Eastern. Okay? All right. Now, this broadcast is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way I'm going to give to you first, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. It's going to automatically log you into our platform the day you do that. But more importantly, going forward, every trading day, you're going to get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The importance of that is you have access to the question box. So you can ask questions, participate in the discussion. Now, there'll be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. Guess what? You can do both of those via our YouTube channel. And it's easy to remember. youtube.com/CFRN. It stands for the Christian Financial Radio Network, but all you have to remember is CFRN. You've already got the YouTube part memorized. So all you have to remember is /CFRN. Now, not only do we broadcast live on our YouTube channel every trading day, as we're doing right now, simulcasting. That means we're broadcasting in 2 different places. But we also archive each and every daily broadcast. Currently, there's over 2,600 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but you can, if you choose, see how we've evolved over the years from where we began to where we are now. youtube.com/CFRN. Our daily schedule for the afternoon broadcast. We start with our daily devotional, word of prayer, some news, a recap of the Logic 247 alerts and the Concierge Trade alerts. About 50 minutes into the broadcast, Michael will join us and give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for 30 minutes. And then I'll wrap up the 2-hour broadcast with our good word for the day. So let's get at it. We are currently on day 5 of 7, and the topic of our devotion is Average Joe. In case you missed the previous days, Average Joe is a true real-life story of a high school football coach who chose to pray midfield, whether his team won or lost every game. Now, he didn't ask the players to join him, but over time, the whole team did. And some politicians, some bureaucrats, and some parents, well, they didn't like that so much. But Average Joe stood his ground. You can read the book, which has now been made into a movie. It was just released last month. Average Joe is the name. Today's scripture is 1 Peter 3, verses 13 through 18. If with heart and soul you're doing good, do you think you can be stopped? Even if you suffer for it, you're still better off. Don't give the opposition a second thought. Through thick and thin, keep your hearts at attention in adoration before Christ, your Master. Be ready to speak up and tell anyone who asks why you're living the way you are, and always with the utmost courtesy. Keep a clear conscience before God so that when people throw mud at you, none of it will stick. They'll end up realizing that they're the ones who need it bad. It's better to suffer for doing good, if that's what God wants, than to be punished for doing bad. That's what Christ did definitively. Suffered because of others' sins. The righteous one for the unrighteous ones. He went through it all and was put to death and then made alive to bring us to God. 1 Peter 3, 13 through 18, from the Message translation. So day 5 brings us to a commitment kept. Coach Joe's public prayers began drawing more and more attention and scrutiny. This public expression of faith upset some community members who believed it violated the separation of church and state. The Bremerton School District began to pressure Coach Joe to stop praying in public, and they forbade him to pray with his players. Coach Joe was willing to avoid the appearance of coercion, though he knew he wasn't forcing anyone to pray. But he was determined to continue with his midfield prayers. He had made a promise to the Lord, and he was going to keep it. Plus, Coach Joe believed the school district's demand infringed upon his First Amendment right to freedom of religious expression, making it a spiritual and legal issue. This lifelong fighter wasn't about to back down. The legal battle of Kennedy versus Bremerton School District was off to a fierce start, and everything in Joe's life became more difficult. He lost his coaching position, and he almost lost his marriage. Denise could not understand why her husband wouldn't just pray privately in the locker room, especially because her career in Bremerton's Human Resources Department was also put at risk. Judge after judge ruled in favor of the school district, but Joe refused to surrender. He and his legal team continued to appeal to higher courts until there was only one court left: the Supreme Court of the United States. Would the years of fighting amidst emotional exhaustion finally pay off? I'll leave you with that cliffhanger until Monday. Pray with me. Heavenly Father, we come before you encouraged by your word in 1 Peter 3, which reminds us to stand firm in doing good and to honor Christ as Lord, even in the face of challenges. Help us to live with gentleness and reverence, trusting in your protection and strength. And Lord, we lift up our new president. We pray for his safety. Guard and protect him and his cabinet selections as they step into leadership. We pray for a smooth confirmation process. Surround them with your divine presence as you did Average Joe, granting them wisdom, integrity, and courage to lead with justice and peace. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Friday. I'm going to give you the numbers from around the world. Give me 1 second. Okay, sorry about that. Now, let me give you the numbers from around the world, starting here in the U.S. with the cash markets, or the indices as they're called. When we get to the charts, it's like a work of art. You're going to go, whoa, because we've talked about it day by day leading up to this point. That's why it's so important that you learn how to read the charts. And as you know, that's the purpose of the Logic 247 alerts, to teach you how to read the chart. There's no magic in what I do, just a lot of time spent learning. And I learned on my own. It's much simpler for you because you have someone to teach you. Anyway, I'm getting way ahead of myself. The Dow's down 344 points. The NASDAQ down 428. That's 2.25%. S&P 500 down 79, almost 1.5%. The Russell 2000 down 23 points, exactly 1%. In the commodity basket, crude oil down $1.18, trading 67.52 last. That's a drop of 1.75%, or $1,180 per contract traded. Gold down again today, $7.30, trading 25.65.60 last. Silver down again, 20 cents, trading 30.36 last. In the Asian markets at the close, the Nikkei gained 107 points. The Shanghai fell 49. Now for the Shanghai, that's 1.5%. The Hang Seng dropped 9. And in the European markets at the close, FTSE down 7, the DAX down 52, the CAC down 42. Pretty quiet trade there. So we had a mixed day in Asia. It was a red day for the UK, and it's definitely a red Radio Friday here in the US of A. So with that, let's go to the news. World news first. South African authorities have restricted food and water supplies to an estimated 350 to 4,000 illegal miners in a shaft in the country's northwest province. The standoff is the latest flashpoint in a government policy to end illegal mining by closing off supply lines, forcing workers to resurface and face arrest. Illegal mining is common in South Africa, once the world's largest gold producer, now home to thousands of abandoned mines. Migrant workers, including those from Mozambique, Zimbabwe, and Lesotho, join local syndicates to search for abandoned minerals. It's a dangerous industry, reportedly costing the country hundreds of millions of dollars in lost sales and taxes, with some workers linked to violent crimes. Since police encircled this latest mine shaft weeks ago, 1,000 workers have resurfaced and have been arrested. Others are reportedly growing weak from lack of access to food and water. The body of at least one miner has been recovered. Mike Tyson and Jake Paul are set to fight tonight at the Dallas Cowboys AT&T Stadium in front of an expected 100,000 attendees. Now, you can watch this on Netflix at 8 p.m. Eastern. The match has generated attention for pitting one of the sports legends against an upstart YouTuber turned boxer roughly half his age. Tyson, 58 years old, holds the record for the youngest heavyweight boxing champion, a feat he achieved at age 20. Tyson then served 3 years in prison for rape in the early 1990s. In 97, he famously bit the ear of opponent Evander Holyfield twice mid-match. He has not fought professionally since a loss in 2005. Paul, 27, so we got a 58-year-old man fighting a 27-year-old man, has converted a successful influencer stint on YouTube into a boxing career. He's the younger brother of fellow social media influencer and wrestler Logan Paul. The officially sanctioned fight will feature tweaks to the rules, with bigger gloves used and fewer shorter rounds. It will be one of 7 contests streaming live on Netflix tonight, as the company debuts live boxing, part of a broader effort to expand live programming. And we all know about, pay-per-view sporting events. I can't find, I haven't really looked, but someone in the audience may know, and if you do, type it in. I don't know if if you have a Netflix subscription already. I don't know if you have to pay extra to see the fight. Maybe they're going to give us a free teaser tonight, and then they'll generate revenue going forward with pay-per-view. We'll see. Scientists announced yesterday the discovery of the world's largest known coral colony near the Pacific's Solomon Islands. The 300 to 500-year-old coral measures roughly 112 feet wide and 105 feet long, so large it is visible from space and 3 times larger than the previous record holder. The coral colony is a single entity composed of at least 1 billion genetically identical polyps functioning as one organism. Coral reefs are ecosystems formed by multiple coral colonies. The coral, part of the Pavona clavis species, is predominantly brown with splashes of color. Recent studies show nearly 44% of warm water coral species face extinction. Since last year, about 77% of reefs have experienced bleaching heat stress, a process whereby corals lose their essential algae. This colony's survival in cooler waters suggests some corals may adapt better to environmental changes than previously thought. Take that, global warming. All right, let's go to the markets. U.S. stocks tanked on Friday today, on track for weekly losses as investors absorbed Chair Jerome Powell's signal yesterday afternoon that the Federal Reserve is in no hurry to make interest rate cuts. Powell's hawkish comments are casting a pale on the market as the initial optimism for President-elect Donald Trump's policies start to wear off. This is a retracement and an uptrend. The S&P has already reversed 1/3 of its post-election rally. Okay, well, we expect a 50% retracement. So this is not news to us or to anyone who tunes into this show on a regular basis. Retail sales data released this morning reflected continued resilience in the American consumer. Now, they call that a sign of economic strength. But what they don't tell you in those numbers is that spending is going on credit cards, home equity loans. It's not because people are, fat with cash. No, they're building debt. So, welcome to the spend room as they try to make you believe that this is good news. It's not. And the markets know it's not. That's why the NASDAQ is down, well, what did I say, 400 points? I don't know. Wall Street is back to puzzling over the Fed's path for the next year, a question already muddied by this week's inflation prints. As of this morning, traders are pricing in 55% odds of a rate cut at the December meeting, compared with 72% yesterday. Per the CME FedWatch tool, bets on a January easing stand at 69% versus the previous 81%. Yeah, well, we'll see if Jerome even has a job after January 20th. October retail sales grew from the prior month, reflecting continued resilience. This is just rehashing the same thing. We don't want to do that. From Bloomberg, The alarm from economists has been clear for months. Brace yourself. If Trump delivers on his campaign promises for an aggressive package of new U.S. tariffs, they've warned a re-elected Donald Trump will set the stage for a historic period of turmoil in the global economy. And yet, there's a reason CEOs, bankers, investors, and even Trump advisors have largely shrugged off warnings about the damage a 10 to 20% universal tariff and even higher import duties on China would do, or the resurgence in U.S. inflation they might bring. From the incoming president's own track record, many see evidence Trump is unlikely to deliver on all he has threatened. I disagree, and express confidence they can adapt to whatever delivers this time around. That I agree with. Even as economists decried his plans as a terrible miscalculation, Trump ratcheted up protectionist threats on the campaign trail because they were a key part of an agenda that's popular with voters. Yeah, it's called Made in America. Made in America, buy in America. Do you want to make America great again? Do you want to make America wealthy again? Do you want the economy we had when Trump was president before? Well, guess what? Anything worthwhile rarely comes easy. So buckle up. There may be a bumpy ride. And oh, the likes of BuzzFeed, they're just so excited because they got something to grumble about now. That isn't fake news, it's illegitimate news. Moving on from that garbage. Elon Musk SpaceX is preparing to launch a tender offer in December to sell existing shares at a price of $135 per share. The tender offer would value SpaceX at more than $250 billion, according to sources. SpaceX did not immediately respond to a Reuters request for comment. Musk, the world's richest person, is expected to wield significant influence in Washington to secure favorable government treatment for his companies, including SpaceX. Musk's dream of transporting humans to Mars could also become a bigger national priority under Trump. Remember when John F. Kennedy sent the man to the moon? If you're old enough, you remember where you were when that spacecraft landed, and there was one small step for man, one great leap for mankind. I was young, maybe I don't remember it exactly, but it was something like that. Now this is crafty. The U.S. Commerce Department said Friday it has finalized a $6.6 billion government subsidy for Taiwan Semiconductor Manufacturing Company, TSMC, U.S. unit for semiconductor production in Phoenix, Arizona. Now that makes it a good deal, and the stock's up $1.08. The binding contract, after a preliminary agreement announced in April, is the first major award to be completed under the $52.7 billion program created in 2022. It comes just weeks before President-elect Donald Trump, who criticized the program, takes office. In April, TSMC agreed to expand its planned investment by $25 billion to $65 billion and to add a third Arizona plant by 2030. We'll see what Trump does with this. That's a double-edged sword there. And the pound, the British pound, has relinquished its advance against the dollar this year as investors anticipating stronger U.S. growth and inflation pile into the greenback. After 7 straight weeks of losses, sterling has fallen back below the level it started this year to trade at $1.26 on Friday, while the pound still looks better than many other peers. That's the longest weekly losing streak in a decade and erases gains of more than 5%. Up until this week, the pound had managed to buck the greenback's strength, supported by expectations that interest rates in the UK would fall more gradually than in the US. But as the market prepares for sweeping tariffs and tax cuts under Donald Trump's administration, well, that advantage has gone bye-bye. All right, here we go. Logic 247. It's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, also crude, gold, silver, bonds. Over the last 328 weeks, we've issued over 18,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. So 328 weeks, over 18,400 individual alerts. Now, since the markets opened this past Sunday night at 6 p.m. Eastern through 6:30 a.m. this morning when Valerie did the recap, she'll update it and finalize it for the week this afternoon. We'd issued a total of 64 alerts, 4 never triggered. We were still awaiting the outcome of 10 at the time she did the recap. That gave us 50 actionable alerts, of which 5 or 10% would have been stopped out. Again, based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, every logic alert comes with an entry price, an initial target. The initial target is designed to get your goal for the day, and then often additional targets, and then a final trade to target. The alerts are sent out well ahead of them triggering, usually an hour, 2 hours, sometimes a day or two, okay? And that all comes from chart reading, and that is the purpose of the Logic 247 alerts. Yes, you can trade them, but don't stop there. Use them as they're intended to teach you how to read a chart. If you're just learning how to trade, when you look at a chart, all you see is chaos and you have no clue what's going to happen next. But once you've been with us a couple months, you'll be able to look at any chart in any time frame. And using our humble indicator set, know with a great deal of certainty, about 80%, what the next high probability move is. You'll know where to expect resistance, you'll know where to expect support, and you'll be able to find the very valuable windows of opportunity. But only if you do the work. If you just trade the alerts and leave it at that, what are you going to do when I stop publishing the alerts? Now, when we first started Logic 247, if you had told me there was a day that I would be saying we have now published over 18,400 alerts, I would have probably laughed at you. But here we are. Well, let's face it, I'm a mortal. I have a shelf life. Only God knows what that shelf life is. But I don't have any plans of stopping at this point. But I can't encourage you enough. Take advantage of this opportunity to learn now, because once you learn, guess what? Nobody can ever take it away from you. And once you learn, you won't need my alerts. Do what you will, but that's the best advice I can give you. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is our night session, and vice versa. Our original alert service, however, the concierge trade alerts, which is about twice as old as the logic alerts, is a little bit different. And let me show you just how different it is. Hey Kevin, how you doing? Good to see you. We will talk. The concierge trade alerts. If you're a member or trial member, make sure you read this information. It's very important. Now, these targets came out last night at 6 p.m. Eastern. Every member, every trial member had every one of these targets the moment the market opened. The ES, the Dow, the Russell, crude, NQ, gold, silver, and bonds. So as we go to the charts, just remember that. And we'll start with the chart. We always start with the daily chart of the S&P. We started talking back here about the rounding top coming, and here it comes. Now from here to here, that's about that 50% retracement we expected. But we said this time we might trade through the BBC and the bullish cross right here. That's your next major support, because we've traded through the BBC, we've traded through the 38% fib extension. So look at about 58.88 as potential support. Let's see how close we can dial it in. Maybe 58.75, okay? But it's right there. And that's where the market, now we could bounce before the close today, but the markets look pretty heavy. So it's possible we could see this today, but that would be a stretch. But Sunday night, I would think so. Now the importance of a daily chart is that institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? It has to do with account size. They have massive accounts. They trade in massive size. They move price. You and I are just liquidity. But that's okay. If you'll make it a part of your daily routine to spend just 2 minutes every trading day, whether you trade futures or stocks, crypto, Forex, ETFs, before you go to your smaller time frames and start trading, look at the daily chart. Now, this was the open last night at 6 p.m. Eastern. And that red candle made a beeline, we talked about this yesterday, to the 38 and the daily BBC. The green line is called the BBC, stands for Bull Bear Cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Now you'll notice that the pullback to the BBC holds more often than it doesn't. Whether it pulls back from below or above. Eventually, it's going to trade through. We know that. Until it finds support, as it did in this case, right across. See these lows? And then the political rally, the Trump election. Now the cooling off period. We will probably end up right about where we were when the election was called. The next stop after the bullish cross will be the 24% fib extension. Right there. All right. To the 30-minute charts. These are the weekly trading zones published every Monday morning at 6 a.m. Eastern. Once they're published for the week, they're carved in stone. They don't change in any way whatsoever. The vertical lines separate today. Here's Thursday. This is Friday, Thursday, Wednesday. Okay? When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Drop to a zone, support. Get the idea? 70% of the time, you'll get consolidation at a zone. 20% of the time, you'll get this, rejection. 10% of the time, you'll get what we call the slice. That's when a 30-minute chart slices through a zone like it's not even there. So, remember, the targets came out last night, right at the open, when this candle opened. And we made a fast drop right to the short target. That candle opened at 59.72 and put in a low at 64.5. So 7.5 points, 8 points. Okay. You only need 2 points to get your goal for the day. At a leg and a retracement, a leg and a retracement. Pull back to the BBC. Remember, price always reverts to the mean, and the pullback holds more often than not. The S&P is now headed for the lowest weekly trading zone for this week. Again, these are the zones that were published Monday morning, 6:15 a.m. Eastern. Now, in the opening candle last night, you see how it sliced through the zone like it wasn't even there? When it hit the target and ran out of steam, it retraced back to the zone it sliced through and then continued in the direction of the slice. So when price encounters a zone, only one of three things can happen. 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. Notice the step line. On the way down, we had the perfect stack here. Price, step line, red and falling, BBC. But notice, the step line is starting to curve to the right. If the step line crosses red and falling, then price will retrace, in most cases, right back to the BBC, just like it did here. See how the step line crossed red and falling? Boom, up to the BBC. So it becomes a question now of, will price make it to the lowest zone or not? Because it looks like we're about to get a retracement. On the Dow, here's where we open. Here's a short target. We get below the short target, and then when we retrace, that target becomes resistance. And that resistance sends us to support at the weekly zone. Support always sends the market looking for resistance. Resistance sends the market looking for support. We've got one more weekly zone below, 42,900. I doubt we get there today, but keep it in mind for Sunday night. Russell. Here's where we opened last night, and we headed straight to the short target. It took 30 minutes, an hour. It took 2 hours to get to the short target. And we got a little bounce. Then we came down to the zone, which is 2328/29. And the low of this candle was 23.9, 2329.9. So we were like 9 ticks off hitting the zone. But it served as good support. Bounced us up. Now this big doji here, that's a heads up that the market may be about to change direction. And it did. There's the 9:30 open on Wall Street. We got below the zone. We bounced up to the zone, which became resistance. That's the lowest zone this week for the Russell. I do believe, yep, 2328/29. And now we're trading down here at 2315. 2317 looks like. On the NQ. This was the opening candle last night, and within 30 minutes you'd already got your goal for the day plus some. You only need 5 points to get your goal for the day. We opened at 977 and dropped to 37. That's 40 points. At $20 a point, $800 per contract traded. Right there. Then we came on down to the zone, did some consolidation, dipped below it, pulled back up to the zone resistance, touched the BBC resistance, and then the bottom fell out of the NQ. Now on the NQ, that was the lowest weekly zone, so we're well below it. But you also see that the step line is starting to hook to the right. As it crosses red and falling, price should retrace back to the BBC and back to the zone. Crude oil. Here's where we opened last night. We were above the BBC. We had blue and climbing, but price failed to rise. It got below the BBC. Blue and climbing turned to red and falling, and it took us right down to the short target. Then we got below the short target, and it found support off this low from Wednesday. Okay, see that? Support will always send the market looking for resistance, which was this high right here from yesterday, right before the close. Back down to the target, another bounce, and now Friday, Thursday, this low on Wednesday, got potential support coming up at 66.90, 95, 67.05, 67.10 to 67. That would be enough to get your goal for the day. Gold flatlining. I mean, gold has just been in the toilet all week. This looks like a transition. So by Sunday night, we may start seeing both gold and silver rally. This was this week's lowest weekly zone. Today, we've come down and hit the short target. Never made it up to the long target. Now we're back. We hit the short target there to the tick. And we're about to get a bearish cross, so that will probably send price lower. Silver. We opened last night, dropped to the BBC. It held as support. Sent us higher. Didn't last long. These highs, just look left, has sent us back down. Market found support right here. pull back to the BBC, we get above the BBC, we hit the long target, we find resistance at the weekly zone, support at the BBC, resistance, 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 resistance at the zone. Back below the BBC, we're about to get a bearish cross. That's when the red line gets below the green line. And that bearish cross, we got to take out this low here, this low here, and this low here. Okay? But remember, you only need 2 pennies in silver to get your goal for the day. So that's all the markets. Still heading lower. We are definitely the low of the session. All right, Michael should be joining us any minute. To become a member, send an email to support@cfrn.net. In the subject line, type in, I want to become a member. Valerie will send you an email with information and a link that you can click to become a passport holder. Once you become a passport holder, you'll get 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. Now, this is an interactive environment where you're trading along, asking questions, etc. Along with 2 hours of live training every trading day, you'll also get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Once you become a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening. Last night it was 6 p.m. Eastern, right when the markets open. You'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And as a passport holder, you'll get the golden key that unlocks all the private channels in Telegram. Now, when you're on the trial, you're able to talk with our traders. There's a trial discussion group. You can ask questions there, and our traders will answer you. But we have about probably 5 different channels. We've got a channel for the weekly trading zones, all kinds of channels. Oh, and there's a channel where all of the previous members-only workshops were recorded. There's a channel with hundreds of those in there. Do you need to watch them all? No, you really don't. It's nice to know you have that wealth of information at your fingertips, but if you just show up every day, ask lots of questions, follow the rules, follow the blueprint, you should be fine. Everything a trader needs, all under one roof, one low price. Again, to become a member, send an email to support@cfrn.net. In the subject line, put, I want to become a member. Robert asks, do you use divergence on these charts? Robert, explain to me what you mean by do I use divergence on these charts? I'll be happy to bring the charts back up. I'll go to the ES 30 minute. Do I use any of this stuff down here when I'm publishing alerts? If that's what you're asking, no, I don't. That's just been on my chart forever. No, I just use price action and these indicators up here. Of course, I use the weekly trading zones. The weekly trading zones and the BVC is really all you need. Everything else is just gravy. When price drops to a weekly zone, we expect support. When it rallies up to a zone, we expect resistance. Price always flows from resistance to support, back to resistance, back to support. Then we get below that zone, and then we pull back up, and that zone that was support now just became resistance. So we get a leg, we get a retracement right back into the same resistance, and then we get a move that takes us all the way down to the next zone where we find support. So I hope that explains it for you. All right.
Here I am. If you were being quiet waiting for me.
I was just getting ready to let everybody know that you should be here.
Oh, good. Sorry, I got here just in time. I had an emergency with my mother-in-law.
Yeah, I've already answered the questions in the question box. So.
All right. So
Take
let
it
me
away.
get the question box. Here we go. Ooh.
All right, looks good.
Okay. Robert, Kevin, yeah, discuss all that. All right, here we go. So good afternoon, everyone. Today is Friday, the 15th day of November, 2024. Let's go here. If you have not taken a free trial with us, go here to mytradingIQ.com and click on the purple button. Now, I haven't done the update yet, but after this session, when you click on the purple button, it's going to bring you to a registration page that will have all of next week's dates on it. I have to fix that part up. It'll have all of next week's dates on it, and all we ask for is your name, your email, and your phone number. There's 5 multiple choice questions down here at the bottom. If you're using NinjaTrader, give us your machine ID. If you're using TradingView, give us your login ID. Right? If you're not using TradingView, you should really get TradingView, right? Because we have stuff in TradingView that we don't have anywhere else. All right, spreadsheet. Today was much easier than yesterday. Even though it was a little confusing right at the beginning. But if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of November, 2024, as I said, and we made 24 ticks on the NQ, 25 ticks on gold, and 4 ticks on the ES. And that put us up $420 on the morning session. Now today, did we trade the Russell? One time, and we didn't trade the YM at all today. I had gold up instead of the YM today, and that worked out well for us. Now, it took us 2 minutes and 1 trade this morning to get to the goal for the day. At that point, we're up $1,100, and we took a total of 14 trades. So on the month now, we're up $4,230 over 11 trading days, averaging $384 per contract per 2-hour trading day. And on the year now, we're up to $104,600 over 215 trading days, averaging $486 per contract. Now, this is one contract for $104,000. We've been hitting $100,000 per year since 2020 with one contract. So that's where you want to be. Anyway, over here, if you're doing the 24/20 blueprint, which means you quit trading when you get the goal for the day and you add one contract a month. So far this year, if you did that, you would be averaging $2,906 per hour, and you would have had to work 64.31 hours if you did it just like me. Now, you should be a lot less than 64.31 hours, but we're catching up. We're reducing that number. We go forward, that number is usually going down. Yesterday was an anomaly where we took almost the whole 2 hours to get the goal for the day, but when I was trading more contracts in here, like I started the year out with 13, carrying over the 24/20 blueprint from last year. I started the year with 13 until I finished August with 20. And it was a little harder to get the goal for the day when you're trading multiple contracts like that, because you get a lot of slippage, or I get a lot of slippage. And so a lot of times where I would have had the goal for the day, but I stopped out because I had slippage. So I had to struggle back from getting the stop outs. And, as I proved yesterday, coming back from being stopped out 4 to 5 times in the first 5 trades can be a challenge. But it can be done. All that to say this. So far this year, we worked 64.31 hours, and if we did the 24/20 blueprint starting with one contract, it would be considerably less than that. That's that. Now let's get into the actual trades. Why does that have a speaker on? Oh, I know why. It's because this just hit. All right, so let's get into the actual trades that we took now. All right, this is the gold. So we had just a few trades here on the gold today. Well, 2 trades here on the gold. We had that one. We picked up 15 ticks on the first one and 10 ticks on the second one. We didn't trade it again. It did have some more nice trades in here, though. I had one right here. That was a really nice trade. Once I put it in the higher swing, I had one right there. That was a really nice trade. It had one right here. That was a good trade. And it was on a 9-tick range. So that's about 15 ticks right there. And with gold, that's 100. It's 150 bucks. It was 10 bucks a tick with gold. And with 11 contracts on, that's 1,650 bucks for me. And it did it again right there, going the other way. It didn't put in a higher swing, so you wouldn't be interested in this one. And then it turned around and started moving down. Gave you one right here that didn't put in a lower swing, so you wouldn't be interested in this one. But you could get back interested in it again once you get all the way over here. Then that one didn't put in a lower swing, so you wouldn't have done that. And then turned around and started going up again. You had a nice long trade right there. I believe that was toward the end of the morning session, wasn't it? Yeah, that was the last thing in the morning session, I think. Well, it was similar to that. It was on the Russell that I was doing, but it was pretty close to the end of the morning session. You had that nice move right there. Then you get into the break, and you had this one, which was a good trade. It did put in a lower swing, so you would have had this one, which was a good trade. You had that one, which didn't put in a lower swing, but it was still a good trade. Then the ribbon got crunched up, and you wouldn't do anything. That was gold. Now, gold is on a 9-tick range. All right. We didn't do anything with the YM. We did look at it, but we didn't do anything with it today, so I'm not going to bother showing you the YM right now. This is what we're looking at the end of the session this morning. As this was happening, I'll come back to that. All right, I'll come back to that. On the Russell, we didn't make any money on the Russell today. We had actually just 2 trades. I got to update that. We had 2 trades on the Russell. I thought we only had 1, and we didn't make any money with the Russell today. I'll come back to this though in a little while. During the break, this was the only trade right here during the break, and that was enough to get the goal for the day. All right, remember, all you're trying to do is get the goal for the day. All right, Kevin, are you still in here right now? And Robert, okay. When you were hoping to get, when you reach out, you discuss these kind of details. Were you talking about the DOMs and all that stuff, the DT Pro thing and all that? Is that what you were talking about? I'm just curious before I go into any kind of detail about anything like that. Okay, on the ES right here, this is our first trade on the ES, and this is where we got the goal for the day right here. The thing that messed me up with this, I had this one and then Q trade on at the same time. When I actually entered this trade up here at 38.75 on the pullback, because you can see it was right there before the, 927 is when I start, and it was 926.24. It's actually 26.49 is when that bar started, so it was right at 927. Okay, good. So I entered this when it pulled back a little bit right here, and I had an 8-tick target on it because that was what the goal for the day was. And it got me in right here at 38.75, and it got me out right there at 36.75. When it was going down, I had bumped my stop to break even, so it came down here, and it hit me there, got the goal for the day, and then it jumped back up, and it put me back long. And I got back out at break even on the long right here. When it came back down right here, I got out of that at break even on the long. The next trade that I took was right here, and that was a valid trade. I took it, and I ended up stopping out on that. So I went from +8 to -2. And then the next trade that I took was right over here, and I got 6 ticks on that one. That got me to +4. Excuse me, I feel like I'm losing my voice. I think I talked a lot today. We didn't put in a lower swing here. There was a trade. That was a valid trade in there, but we didn't put in a lower swing, so you couldn't take anything after it. The next one was right over here, and that was a valid trade. I didn't have a lesson plan for today because it's Friday, but I was doing a lot of talking about lots of different things. So I ended up missing some things. This right here would have stopped you out. And because that stopped you out, you wouldn't take this. You had to get a lower swing before you can trade in that direction again. So you wouldn't have had another trade until all the way over here, and that would have stopped you out too. Okay, and then there was really nothing. We had this jump right here. I don't know why that happened, but we had that jump right there. I remember looking. Somebody asked me, it was 10:51, and they asked me if there was any news, and I said, I don't know. Let me go see if there's any news at 10:51. There wasn't. Anyway, because it wasn't just this market that jumped like that. The NQ did too. But right here, there was another trade right here that worked out pretty well, but it didn't put in a lower swing. And then I thought it was this market. No, it was the Russell that we're talking about this stuff, right? In here, the ribbon got crunched up in here. I was looking for it to bounce right here, and it went through, and it got crunched up right here, so I didn't do anything with that. And then we get into the break, and in the break, it looks like there was one trade right here. That's the easy and obvious trade right there, guys. You know, the trade that I was looking for this morning, my favorite trade. This was pretty much it right here. My favorite trade. Okay, this one, where it pulls back, it hits a ribbon and a 50% retracement at the same time, and you come out of the overbought. All 4 lines in the ribbon are visible. That's my favorite trade right there. If you wait for that trade all day, that'll be the one that gets you the goal most days. Robert, let me get into that in a minute, okay? I'll get into that in more detail in a minute. The question was, am I still with Daniels? And that question goes a lot deeper. So that was during the break, and there was another one right here. This would have been the entry point right here. That would have stopped you out, so you wouldn't have done the next trade. Then nothing else, and that was it. Right, that was the ES today. So I ended up with plus 4 ticks on the ES after all that. Now on the NQ, we'll go all the way back here to the beginning. All right, on the NQ. Now this was part of the screw up that I had in the very beginning, where I had 2 trades on that ES one that I was describing to you a minute ago, where it went down to plus 8 ticks, got me out, then came back up and hit my break even stop and put me back in long, and then came back down. I got out at break even. This one here got me short and ran down here, and I was trying to trail my stop. It was at like plus 30 ticks, and I was trying to trail my stop, but then something happened and just jumped up like that before I actually clicked the mouse to put my trailing stop in place, and it stopped me out minus 36 ticks. So I went from plus 30 to minus 36 in like a second or two. Well, 10 seconds. But it didn't seem like it was a whole 10 seconds. Sure, Michael, I'll show you that in just a sec. Okay, we had another break-even trade there, another break-even trade there, then finally got it back here. So it was minus 36 after that first one. Actually, it was minus 37 after that first one. And then I had a 48 there, and that got us to 49 there, and that got us to plus 12. And then I stopped out again. That put me to minus 24. And then I had a break-even there, and another plus 48 right there. That got me to 24. And that was pretty much where I stopped trading, I think, because I started talking. And today when I got talking, I was on a roll, I think. I think I was saying good stuff, but I don't know. You guys be the judge. No, take that back. Don't judge me. We had a trade right there, a trade right there, and a trade right there. Now, these guys right here, this one would probably be okay. The distance between the entry and the swing low, it's got to have 4 points in there for me to want to take the trade. Okay, enough to get the stop to break even. They got choppy and sideways all through here. I wasn't really paying attention to it. And this is that spot that jumped up, the same one at 10:51 that I was telling you about a second ago. And this one here was too close to the swing low to want to take. This one here was okay to take. It did put in a lower swing. You could have taken that right there. It didn't put in a lower swing, so you wouldn't have done anything in that direction. Then we got down toward the end of the session, the end of the morning session. It was a nice long trade right here. It would have been a while holding on to that thing. I would have gotten a break even. Then you get into the break, and during the break, it looks like there was a nice trade right there. Another one right there. That would be questionable because you got to be able to see all 4 lines in the ribbon. You can, I guess, if you spread it out enough. They put it in a lower swing, so you could have taken the next one, which was right over here. That would have been really close to stopping you out. Depending on how much slippage you get when you enter, it might have stopped you out, but we were really close to stopping you out. And then it pushed down. It didn't put in the lower swing, but it definitely gave you 20 ticks. Could have taken something, or at least a break even. Really sideways for a little while right here, and then it gave you, that's nothing. It didn't come out of the overbought. And you really have nothing else since then. Okay, so Michael, my favorite trade, I don't know if it was on this market or the other market. I think it was on the ES when I said that, wasn't it? I think I was talking about the ES. Let's see if I can find exactly where it was. See, this is the one that we were watching right here. Remember we watched that and it pulled back too deep. Where did I have those fib levels at? Let me go to the end and see if I can find them again. I don't know, it might have been on the Russell. I said it's my favorite trade. But basically I can explain it to you. This is one right here. This was pretty good. It's right at 930. It's not the one that I was talking about earlier, but this is just about the same thing. Okay. And this trade here, if you take one trade, you see how this leg right here goes down, it pulls back up, it hits the ribbon. You can see all 4 lines in the ribbon, and it's 50% retracement of that leg down. That's my favorite trade right here. All right. With the pullback, hits the ribbon and the 50% mark at the same time, and it closes back down the 50% mark, and you come out of the overbought at the same time. That's my favorite trade right there. Okay. It was a different one that I was talking about earlier, but that's it right there. So, I was saying in the partners meeting last night, I think when a trend starts out, when a trend changes and it starts out, sometimes it's going to be kind of junky at the beginning of the trend. It goes up like that and then it pulls back and doesn't quite go down far enough, and then doesn't quite go up far enough. And so you don't really have a good leg length at the beginning. But then when it starts, it breaks that leg down right here. This second one down is the one that usually defines the trend and the leg lengths that you look for, and that's the best one right there. And that's what I like the most. Okay, we talked about this in the meeting last night, I think. I think I did. I don't know. I don't remember. But what this is right here, when it pulls back and it hits the ribbon and it bounces off the ribbon, you can see all 4 lines in ribbon identifying a good trend. You get a pullback, a 50% retracement to resistance, and you have a clearly defined trend, and you come out of the overbought at the same time. That's just saying it's going to repeat this leg. Okay, it's like screaming, watch, we're going to repeat this leg right now. That's what it's saying. We're just going to try to repeat that leg anyway. And usually the distance between here and here is enough to get your goal for the day, right? It should do double that. That's what it should do. Every time it should do double this distance. But just that distance is enough to get your goal for the day, right? That's what I was talking about. So like right here, if you entered right here at 36 1/4, it dropped right here, 33.75, 36 1/4, 30. Yeah, that's more than your goal for the day. Even if you got slippage at the beginning and at the end, you still get your goal for the day in that move. But it should have done this whole leg right here, right? Like that. That's my favorite trade. And sometimes it doesn't come together perfectly. When it's pulling back, sometimes it'll happen like this and doesn't come together perfectly. But that's where the variations of the actual trade come in. But that's what I was trying to show today when it was actually happening. There's a couple of, I said I was going to go back to that on the Russell. At the end of the session this morning, when this was happening, 1 bar at a time, we're going through this 1 bar at a time. I saw it setting up, and I saw the distance right here, right? I saw this distance right here, and I said, well, this is just setting up almost right. If it pulls back right now, this was the leg length at the time, right? We had this leg length working at the time. And this is part of Wednesday's lesson plan. I don't think I was starting the leg length there. Let me do it over again. Let me start the leg length here. this is leg length I was working with at the time. Given the information we had at the time, I said, all right, so if you get a 50% retracement on this, it's going to be right about here. And by the time it retraces the 2 bars that it's going to take to get down there, the ribbon is going to move up some. So it'll be a retracement that hits the ribbon right there. Okay, and that would be my favorite trade. That's what I had at that time. That's the information we had available to us, and that's what I was thinking at that time. And I believe I drew it in here, right there. Okay, I might have done the leg length from back here. But I think I eyeballed it to begin with, and I was saying, so that's what I'm looking for on a retracement. Okay, and then oops, let me bump that over. And then the next bar I think went a little higher, or it might have actually been here when it was doing it right here. I might have started that whole process. And then anyway, the next bar went a little higher, and so I had to move everything up just a little bit. And so you see, that's why I had the yellow dot moving up, because that is where the midpoint was going to be. This midpoint right here was changing. And then I was saying, okay, I want it to pull back down and hit the ribbon right here. It doesn't have to hit the ribbon, but that would be ideal if it did hit the ribbon. And at the same time, get into the oversold. So we needed a down close. This bar didn't close down, so I was saying, okay, well, that might kind of screw things up. The next bar's got to close down to get us into the oversold and to get down to the point where you'd want to jump in this trade, because I'm looking for a 50% retracement of this that pushes it down to the ribbon and into the oversold at the same time. Okay, and so you go one more, we got the down close, and I was really liking it, except this right here. It didn't go into the oversold. So if you remember me saying at the time, I really like this trade, but I'm not going to take it because it didn't go into the oversold. I do think that it's going to work. I do think that it's going to go up, but I didn't take it because it didn't satisfy the rules. And I had a great feeling that it was going to go up, and this is the leg length that it was going to do, is what I was looking at. I didn't draw the leg length this morning. I eyeballed and I did the diamond principle for you this morning. I didn't actually draw the diamond principle. I used this to do the diamond principle for you. But that's the leg length that it should do. From wherever it stops going down, this is where it should go up to. Okay, whenever it stops moving down. And that's what I was saying this morning. And so it went right to there, almost hit the ribbon. That's close enough. But this, it doesn't have to hit the ribbon. That doesn't have to happen. This does have to happen. This didn't happen. I was kind of bummed because it didn't happen and disqualified the trade from me. But I said, it's going to do this. I'm almost certain it's going to go up to the prior swing high anyway. I don't know if it's going to go the full leg length, but I was thinking it would go up to the weekly trading zone. But the diamond principle actually had it put up, on the side up here. You'll see it in a minute. It didn't finish it, but it got up to the prior swing high right there. All right. And it just about finished the leg length right there. So that right there is enough to get your goal for the day. You see what I mean? And then it came back. It did make a higher swing. This is what I was thinking it was going to do right here. In this amount of time between here and here, I thought it was going to do this. All right. It got pretty close, and it got there 1 bar earlier, 2 bars earlier, it looks like. But then it stopped. Then the next pullback came, and you got nothing. You wouldn't have done anything here because you're inside a weekly trading zone. But that's what I was trying to explain this morning when that was happening. As it was doing it bar by bar, I was going through it all. And I was drawing these out here in the future. If it did do what it should have done and continue the trend, then it should have made it up here. I was saying when it goes up here, it's probably not going to do it in 1 leg length. It's probably going to go up and pull back and give you another opportunity to get the second one. So we had this opportunity on the first one. If it would have come out of the oversold, we had that opportunity on the first one. And then if they weren't going into a zone right here, we would have had an opportunity on the second one to get up there. But it was going into the zone, so you don't take the trade, and it turns out that was good. Okay. But that was almost my favorite trade. If it would have been coming out of the oversold right there, it would have been. But you see, if you wait for that trade to happen, and it happens again and again and again, if you were to just wait for that trade to happen, then most of the time you're going to be doing all right. And excuse me, like this right in here. This was a very short, condensed version of it, but it's at the beginning of the trend. So coming out of this junk right here, I might not have done anything in here. Well, I didn't do anything in there. I might have just been waiting for it to give us this big move down. When you get this big move down, This is your leg length down, this is your retracement. So let's look at it in this kind of isolated view right here. Okay, right here. This is your leg length down, and this is your retracement. Now, it didn't hit the ribbon. It doesn't have to hit the ribbon on the pullback. Now, I like to get close to the ribbon. Hitting the ribbon is best, but it doesn't have to hit the ribbon. But pulling back to the 50% retracement, coming out of the overbought where the ribbon is all spread out, we have a clear trend. That's what you're looking for. In this case, your entry would have been right here at 43.2. The swing low is down here at 41. That's the goal for the day right there. And it should do twice this length right here. From here to here, it should do twice that. Right? And you can see that it did. So what I would have been thinking, and maybe telling you and maybe drawing for you, is this is your leg length. And that's from Wednesday's lesson plan. That's your leg length that it should do. You see. So, I know, it looks easy, doesn't it? All right, so Robert, I was telling you that I was going to talk to you, and Kevin, I don't know if you're still here right now, if you're still listening. Your question wasn't about what I'm going to talk about anyway, but there is something that we need to address, and it's coming up quickly. We have less than a month left, right? Friday the 13th, next month, right there. I think that's the... Okay, something he wanted to talk to you about. Okay. Well, Robert, you left. Can you use divergence on these charts? You can. And he's not here anymore. Robert's not. That's too bad. I haven't talked to him in a long time. Am I with Daniels? StoneX bought Daniels. Actually, OEC bought Daniels, then Gain bought OEC, then StoneX bought Gain. So it goes that many times in. Bert, Bert's still Bert. He just gets a different business card. He sits in the same office. He does the same job. He just sits in, just gets a different business card every time. Make it a bump and pay. Who knows? Usually they, well, I don't know. I like to think they do that for the people that they keep. When they do that kind of thing. I don't know. It's been so long since I've worked in that kind of world. But wow, it's 122. No, it's 122. I got some time. Mm-hmm. Okay. 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 Sure. All right. Let's just start out with a brand new browser. Okay. All I have to do is go to mytradingiq.com. mytradingiq.com. This is our website. This is where you sign up for the free trial. There's no credit card required for the free trial. All I got to do is fill in the blanks. Anyway, go to trading platforms. Okay, when you go there, the DT Pro stuff, don't get bogged down in that because that's going to be replaced very soon. Go here to TradingView. All right, watch this video. This video is 2 years old. It's only 3 minutes long, but it's still valid. Watch the video. It tells you pretty much what to do from the beginning to end. Basically, click on this link right here, and that's going to bring you to the TradingView webpage. These are the different opportunities that you have to join with TradingView. All right, there's another one that's free. It's absolutely free. And those are the annual prices. You want to click on monthly. But if you're just going to have a couple of charts, then the essential is fine. The big difference, I mean, there's a lot of big differences, but one of the main differences between the free one and the lowest level paying one is this right here. Oops, not that. This right here, the custom range bars. All right. Now that's nothing to a lot of people because a lot of people don't use range bars, but we do, and we use custom range bars. They'll give you default range bars, a 1, 10, 100, and 1,000. And you can get by with that if you know what you're doing. You can get by with that, no problem at all. But we do different size range bars, so you're gonna want to get that custom range bar thing. So you're gonna want to pay $14.95 a month. Now, the one thing that TradingView does not come with is free data, free real-time data anyway. Now, let me show you this. It is $7 a month. But let me show you something else. Let me disconnect from this. I was doing this paper trade thing so I could show you the DOM this morning. Well, let me just show you that. If you have the paper trade thing on, they have their own DOM that's attached to TradingView, so you can connect to this. Okay, you can connect directly to this. No, Bert's still got the same cell number, Michael.
Yeah, 866.
866-928-3310. He's still got the same phone number.
Yep.
Over all these years and all these company transitions, same phone number.
I've been with him since 2008, and I've had my phone
Same
number
day.
since 1996.
Yeah, I've had mine about the same, even a little before. Anyway, not to get bogged down in that, I'm running out of time. To connect to your broker, TradingView again is just a third-party trading platform. All right, they are not brokers. But let me log out of this thing. Log out of that. These are all the brokers they do connect directly with. That's not even all of them. That's not even all. You go to all brokers. There's like 70 of them, and it's growing constantly.
I told you I joined the competition, the Leap.
Yeah, you did. Yep.
Yeah.
Yep.
25 grand in 2 days. But what I didn't understand was that when you sign up for the competition, they give you a separate paper trading account. So I mistakenly placed the trades in
your paper trading account.
in my basic paper trading account. So I've already submitted a ticket and said, hey guys, I'm just not the sharpest knife in the drawer. Is there any way you could maybe, because you can look and see I signed up and then I immediately placed a trade, and I just wanted to get the 6 months free. That's all I was after.
Well, anyway, StoneX is the one that I use. Right, that's the broker that I use. That's yeah, and Dwayne too. That's what this stuff is here. Now this is actually got the DT Pro white label on it, or the DT Pro label. It's not white label. The DT Pro label on it, but it's the same as the StoneX thing. Now that's all going to change.
But if you have your money with Bert and Daniels, you don't have to move it or anything. It's like a seamless transition.
Yeah. Yeah, and if you want a paper trade on TradingView, I mean, that comes automatically with when you sign up, you get an automatic paper trading account with 100 grand in it, and so you can play with that. Now, you can play with it if you want to, but if I do Shift D right now, sorry, I gotta connect back to that paper trading thing. Hang on, you gotta be connected for the Shift D to work. Now, if I do Shift D right now, it brings up the DOM right here. That's their DOM. Their DOM doesn't have depth of market. You could pay for it, I think. I'm not sure, but I don't know if you can using their demo if you can get depth of market. I'm not sure about that, but if you hook it up to your actual broker account, then you will get the depth of market, and the depth of market is all of this stuff. That for me is it's critical. It helps me manage the trades when I get into the trades. But if you just want to get in there and start placing trades, you can do it and place the trades. Now, it's kind of horrible, this DOM. It's horrible. That's such a rough word. It's comparatively, it's not an easy DOM to work with. All right, there's like 15 mouse clicks you got to do to place a trade. So with the speed of trades that I do, that would not work for me. Not at all. You can go to the order page here, click on the order tab up here, and you can set this up so that it's set. So every time you buy or sell, and you do this, and then it goes on to the chart, right? So I'm clicking on the Russell right here. Look, I accidentally entered a trade already. I think, did I? No, I didn't. Because I put this on and that on, it put it on the chart where my stop and my profit target would be. If I hit buy right now, it's going to stick me in, and then I can manage it on the chart. So you can do that, all right? You can do that. Oh, they don't think they're going backwards, Ken. They think the CQG is the thing. Me wanting to use Sierra charts for the DOM, is because this DOM is so much like the DOM that we normally use, that I normally use. This is the DOM that I normally use. This is the DT Pro DOM, and this is the Sierra Chart DOM. Now, the Sierra Chart I'm doing through StoneX. I'm doing it through StoneX, so my account is still hooked up to the StoneX account. I don't have to move my account or anything like that. It's just another third-party platform that's hooked up to StoneX. Okay, like this one right here, if I were to trade on this DOM, that would go to my StoneX account and then go to the exchange. This one right here, if I place a trade on this, it's going to go to my StoneX account and then go to the exchange. The Daniels trading account that I had here, that I still have there, that goes directly from here to the exchange. It doesn't have that extra layer in it. But there's no getting out of the extra layer anymore, I don't think. It might, the CQG thing that they're getting, the CQG thing that they're doing to replace, here's the CQG. This is CQG. Now, the way CQG is going to work is kind of like the DT Pro. That is supposedly going to go straight to the exchange. But that's going to be, it's going to have a chart here and a DOM here like the DT Pro does. All right, but that doesn't work for me. And this is so much like the DT Pro thing where it's just like one mouse click and it puts the trades on, puts my brackets on, you move it around by dragging it, you move it around by dragging it. And it's so much like the DT Pro. It's like very little change for me to get from this one to this one. The only thing is going to be the fills I think the fills are going to be pretty bad. Now because it's got that extra layer, it's not going to be the same direct connection between here and the exchange like I'm used to. So I'm going to have to suck that up because I would rather have it so I can place the trades where I'm supposed to place the trades when I'm supposed to place the trades. Then I can deal with slippage. I've done that before. I can deal with slippage. But the question was, one question is why StoneX is going backwards. They don't think they're going backwards. They think this is backwards. They think this, they think these are outdated, and they probably are. Well, the DT Pro one is definitely outdated compared to all the stuff that a lot of the other ones have. The DT Pro one is outdated, but it's got everything that I need. So for me, I don't want to change. This one here has a whole bunch more bells and whistles than the DT Pro one does. A whole bunch more. There's like 10 different kinds of stops you can have. Trailing stops, trailing on this and trailing on that. And if you right click on this, all these things right here, just one right click is all those things. That is the equivalent of all these buttons and then some more. All right, all those buttons and those buttons. Just a right click gives you access to all the same things. And so I'm doing Sierra Trust because that's what I need. You guys don't have to. The easy thing for you guys to do, the easy transition for you to do is going to be to go to the CQG thing. That's going to be the easiest transition for you. I mean, I'm going to learn the CQG thing too so I can show it to you and so I can do it with you and I can work through it. But right now I don't have everything set up properly. I just downloaded it. I don't like it at all. What I did do when I downloaded it on my laptop and I started working with it on my laptop, I didn't like it at all. This is just like what I do now. So I'm going to stick with this one, I think. And I'll, as I get further along in this process, I'll let you guys know. And I'll create a video that helps you do it. If you want to do this, this costs money. The CQG is going to be free. This is $36 a month. And I'm paying extra for exchange fees that I think I already pay for that I won't have to pay for, I don't think. But I know this is $36 a month to use this. But I mean, that's nothing. Really, $36. Really, that is nothing. That's like, a drive-through at Zaxby's. It's nothing. I feed Jake on that every night. And so, if that $36 is going to be the thing that makes you not want to do this, then maybe you shouldn't be doing this at all. If you're going to get something better for $36, that to me, that's it's not really an issue. It's not a thing. It's an expense. It's a business expense. Is what it is, literally. But the CQG thing, I'll have that running for you guys next week, so I'll be able to show you stuff with the CQG thing next week. I'll try to figure it out over the weekend so I can play with it some over the weekend, and I'll be able to show you all that.
You just made a really important point that everyone should think about. Every business has expenses, but as a trader, your expenses are so limited. I mean, electricity, if your accountant's clever and can factor that in, your internet connection, your exchange fees and whatnot. I mean, so, I mean, if you go out and open a Subway or, I don't know, a car wash or whatever kind of, any kind of business you want to go into, even if you just want to be a landscaper, I mean, and I'm not dissing landscapers by any means, I'm just saying you got to buy a bunch of mowers and rakes and trimmers and
It's a lot.
yeah,
And that's a bigger initial outlay of capital than doing this.
yeah, far more.
It's multiples, and it's a lot more work. A lot more work. And depending on the weather and everything else, that is a lot of work doing that kind of stuff. Something that I was just gonna say, I don't remember what it was. I don't know, but well, there you go, Kevin. So yeah, so we are going to be forced to go to a different trading platform. When I say trading platform, I mean platform that we actually place trades on. The charting platform is staying the same. We're going to stay with TradingView, of course, for charting. That's not going away. TradingView is not going away. Not when you have 60 million people using it. They're not going anywhere. DT Pro, it doesn't surprise me that much that it's going away. I mean, it stinks that it is, but there's like 15 introducing brokers that use the same thing. So it's not just the people that Daniel's Trading have, however many thousands that is. It's all the other guys that have thousands as well. They're all going to have to do something different, and they're all under StoneX. So StoneX is making this command decision and getting rid of it. And so to make up for that, they're lowering their margins and they're lowering their commission rates. Their commissions are lower than they've ever been, lower than I've ever paid for commissions right now. StoneX is. So I'm kind of glad that I'm able to stay with them and switch into Sarah charts and able to stay with StoneX because the commissions are so low right now. And in the spreadsheet, when you look at the spreadsheet, and I did this back here, when we started the spreadsheet back in 2013, these were realistic numbers. To place a single trade on crude, it costs over $7 round turn at Daniels. And the ES was 580, I think, or 586 or something like that, round turn.
585, I think.
Something like that. So these were realistic numbers back then. But now, even the low one is double what I'm paying. So it's changed. Things have evolved, and to make up for the hassle that they're causing, they're giving us like the margins are like $500 right now or something like that, or the amount that you need to open an account. You used to have to maintain $2,500. Now I think you got to maintain like 200 or something like that.
And that gives you you used to
demo.
lose your demo account if you fell below a certain threshold. But now, as long as you got $1 in your account, your demo account will still work.
Yeah, I still got this thing going on over here. Let me cancel this. There. But so there's, the margins are lower. I mean, last week when the election happened, the margins were, they maxed them out. But leading up to the election, they were lower. And now that the election is done and the markets are kind of calmed down, when it gets back to the new normal, their margins are considerably lower. Where before they were, like if you look at the actual margins.
If you just Google StoneX margins, it'll take you to a page where it lays it all out for you.
Yeah, these are the margins. These are the old Daniel's Trading margins, all right? And let me bring up the indices here. These are the ones you're used to looking at. These are the old Daniel's Trading margins right here. All right, the maintenance margin, initial margin for the ES, 16,000 initial margin, 14.6 maintenance margin.
But there are special day trade rates.
Yeah, there are special day trading rates, and they don't list the day trading rates in here. And the margins now for StoneX, the margins that they list on their website, they update daily automatically, but they're a lot less than this, and that's what their margins are, and they're going to be in the future. So, they're doing their best to keep the business that they have that uses DT Pro and all that to make it change. And they think that going to the CQG thing is a step up. that's what they think.
Yeah, I'm going to start with TradingView. I just have to learn how to execute on the CQG DOM, and Bert's going to help us with that as he gets it
Yeah.
figured out.
Yeah, and I'll work on it too and try to get it figured out myself so I can help everybody too. All right. Well, I have run way over today, but I know, Kevin, I know, you and I have been talking a little bit over the past few months about, things. And so I wanted to make sure that your questions were answered. So now hopefully some of your questions with Dwayne are answered, and I'm sure you're going to have more. And Robert, if he goes back and watches this on YouTube, hopefully I think all his questions are answered too. And anybody else that might have had any questions about it, I'm working my way forward with it. I'm learning, and as I learn, I'll tell you. Now, I sent out an email last night. I said something in last week's partners meeting. Let me show you. I said something in last week's partners meeting. I'm sorry, that's the wrong one. Last week's partners meeting that I might have said just a little prematurely. And where did I send that from?
Speaking of sending stuff, guys, if you want to email us, make sure you email support@cfrn.net. We had a hitch in the giddy up, and I'm going to work today and this weekend to get that fixed so that you can still use support@mytradingiq.com, but for right now, use support@cfrn.net.
Yes.
So I can get it fixed.
All right. So this was the email that I sent out. Because I said, I feel as though I may have prematurely suggested that you ask for this info because in hindsight, I see that it's not in the proper order. And as I was stumbling through multiple trading platforms and not necessarily asking the right questions at the right time, but putting the pieces together, this is just for Sierra charts. Okay, and this is just to get the DOMs working. We're not going to have indicators on Sierra charts. We're not going to have indicators on CQG either, not right away anyway. This is just to get the DOMs working, right? Not the charts. We have the indicators on TradingView. That's the primary one, all right? And I put this in here too, so you don't email me 100 times. But step one is you go to StoneX, go to my StoneX application and user settings, third-party platforms. This is only for people who want to do Sierra chart DOMs. Okay, so most of you won't want this at all. But you can see it's just a bunch of steps that you have to go through, and nothing is intuitive. And I'm going through here, I'm like this thing right here. It took me a week to find that. Nothing is intuitive. Nothing. And, ChatGPT is a big help. Believe it or not. You wouldn't think it would be, but it finds it. You got to ask the right question. So if you ask the wrong question, you're going to get the wrong answer. But, so in here I pay $12.50 for the CM exchange fees that I already pay through StoneX. I don't think I needed to do that, but I didn't know at that point that I had to do this and then I had to do this. And that would bring all my data in from StoneX. But, there's a whole bunch of steps to make this happen. And that's to get Sierra charts. The CQG should be much easier. Like you download CQG and you put your ID and password in. That's how easy the CQG should be. So that's what they want it to be anyway. All right. I'm making it complicated with the Sierra charts because I need to have a different kind of DOM, but you guys don't need that. So we'll figure it out. All right. That's it. All right. With that, I guess I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. I'll let you guys get on with your weekend.
Okay. Then let me do this and this. And then I gotta do that. Okay, all that's good to go. So let me grab the screens. Bang. Okay, recap of the morning session.
Today it took 2 minutes and one trade to get to $1,100.
Great way to end the week.
It was indeed.
Okay, guys, I've covered all of this. We're going to take just one last look at the daily chart. Okay. Now, we were creeping up on the lowest weekly trading zone, and we still are for the ES. But let's go back here in daily, because the one I really want to keep you to keep your eyes on, because see, we're below the 38 and the daily VBC. So this bullish cross right here, that's where price is headed. And I can't say 100%, but there's extremely high probability when price drops to where that blue line crossed the green line, okay, that will almost always be good support, at least for a bounce. Now on the second time down, it may break through it, so then you'll be watching for the 24% fib extension, okay? Just want to make sure everybody understands that. So I've already told you how to become a member. Send an email to support@cfrn.net. In the subject line, just put, I want to become a member. Valerie will send you an info packet that includes a link where you'll click and actually become a member. And then you'll have the live training room, the one-on-one mentoring, the indicators, the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, the members only workshop on Thursday night, everything a trader needs, all under one roof, one low price. So our good word for today, Friday the 15th of November, is getting real. 1 Corinthians 10:13. The temptations in your life are no different from what others experience. The problem isn't just that we sin, it's that we can't talk about it. We're comfortable with tales of people who used to sin because they have happy endings. Imagine going to a counselor and saying, I only want to discuss problems I used to have. Please don't ask me to confess my current ones. I would be embarrassed. I'm afraid you would reject me. Why would you go to a counselor and try to convince them you don't need counsel? People are okay telling a doctor about their physical problem, or a mechanical problem with their car, or a mechanic about a mechanical problem with their car. Shouldn't we be okay telling each other when we have a problem? If you want God or anyone else to love the real you, you have to work at getting real. David was Israel's best king, but he was a polygamist. He was a horrible father. He coveted another man's wife, committing adultery with her, attempting to deceive her husband, ultimately having him murdered, and covering up his crime for a year. So he was a coveter, an adulterer, a liar, and a murderer. Yet the Bible calls David in 1 Samuel 13:14 a man after God's own heart. Is it possible for someone to be struggling so intensely with sin and yearning for God at the same time? Yes. And it's also why the Bible says in James 5:16, confess your sins to each other and pray for each other so that you may be healed. And that's our good word for today. Now, if you need to take off, you go right ahead. But I stumbled across a couple things today that I thought would be worth sharing with you. Do you want to be liked or loved? Now someone else wrote this, but I identified with it. I spent the first 30 years of my life wanting to be liked. I said yes to everything. I avoided hard conversations. I never established boundaries. I let things slide. I was easy. Then one day I realized that the hidden cost of wanting to be liked was far too high. I may have been liked, but at what cost to the rest of my life? The painful truth is that a lot of people will like you when you're easy, when you say yes to them and no to yourself, and when you just let everything slide. But your real ones will love you when you do the opposite of those things. When you say no, when you embrace boundaries, when you have the hard conversation, when you stand up for yourself. The goal is to be loved, not liked. Remember that. Marie Curie, who we're all familiar with, this is a famous quote of hers. One never notices what has been done. One can only see what remains to be done. The ambitious mind will always lose sight of progress in the moment. Zoom out and reclaim that perspective. Now, a framework to embrace the chaos. It is the idea and practice of embracing everything that life throws at you, the good and the bad, the calm and the chaos. The idea finds its origins in Stoic philosophy, with ancient philosophers like Epictetus and Marcus Aurelius, consistently emphasizing the acceptance and embrace of uncontrollable reality. German philosopher Friedrich Nietzsche believed this embrace was central to unleashing our own personal greatness, writing that one wants nothing to be different, not forward, not backwards, not in all eternity, not merely bear what is necessary, still less conceal it, but love it. The importance of this idea is difficult to overstate. Life is unpredictable. If you need to feel in constant control, if you need everything to go according to plan, you're in for a long, hard life. Amor fati is a call to accept the uncontrollable, to embrace it, to love it. It's a reminder that adaptability is always more important than planning. Each storm, with the chaos and uncertainty it brings, is an opportunity to grow and thrive. Detach from your desire for control over the outcomes and center instead on your power to control your mindset. Celebrate each moment as unique and necessary. Stop fighting and start engaging. And I'll end with this. I recently came across this simple story. The villagers had been coming to our local wise man every week, many complaining about the same problems each time. One day he told them a joke, and everyone roared in laughter. After a couple minutes, he told them the same joke, and only a few of them smiled. When he told the same joke for a third time, nobody laughed. The wise man smiled and said, "You can't laugh at the same joke over and over, so why are you always complaining about the same problem?" Here's the lesson. Don't complain about anything. If it's within your control, go do something about it. If it's not, then complaining is just a waste of energy. When you complain, you're giving too much power to the thing, whatever it is. Take back your power. And now I'm done for the day and for the week. And you're probably glad. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. fixed.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.